Good morning, good afternoon, good evening, and welcome to the Wednesday, the 16th of November, Bull versus Bear webinar. Steve Miley on the call here for Trade Day. Welcome, everyone. We'll go through our usual regular run through in here today. We'll take a look at the calendar, what we've had, what we've got coming up on the macroeconomic data calendar. We'll take a look at some articles from the major news wires. What are the major macroeconomic, geopolitical, fundamental events that markets are focusing on right here, right now, and how it's affecting different asset classes? And then we'll take a look at the charts. Where are the support resistance levels? Where are the potential trigger points as I see them going into today? Right, let's kick off with the calendar. Well, we've had inflation reporting here out of the UK this morning, running hotter than anticipated. So you can see in here in green, the month on month 2% above 1.7% forecast. The year on year 11.1 above the 10.7. So not good for UK inflation, running higher, hotter than anticipated. Moving on, going into this afternoon in just under an hour's time now, we have the core retail sales data coming out of the US. That's going to be the main focus going into today. A little later on, at the same time, we get the CPI data out of Canada as well. So we will also need to keep a little eye on that, but really the retail sales data more likely to be impacting onto the markets that we're looking at. A little bit later on, after that, we get Bailey, the Bank of England governor, speaking, and the inflation hearings as well. So that may have an impact, could have a follow-through impact into European stocks, into the UK market, European stocks, and potentially onto US. And then we've got 9:15 Eastern industrial production data. Business inventories and retail inventories coming at 10 o'clock in Eastern. Just ahead of there, we do get Williams speaking from the FOMC. And then at 10:30 Eastern, we get the crude oil inventories data from Cushing. So, quite a lot coming through in here today. The big focus really on retail sales, but nevertheless, watching out for the other data we have coming through there, and also Fed member Williams speaking later today. What else we got in here? So US futures in here, slight little bit of a wobble in here. We had a setback and a rebound on stock indices last night because of concerns regarding a rocket strike that hit the Polish, went over the Polish border, rumors of it being from Russia. Although we did then get markets initially sold off and then rebound. Biden's since come on the tape saying information that maybe it's not from Russia. But nevertheless, in here, look, Biden says unlikely we'll get intel brands fired by Russia. So, and that did wobble markets a little bit last night and continuing a little bit of a wobble going into the day, but nothing too significant on the downside. The underlying risk-on theme that we've seen since last week's CPI data remains very much intact. Let's take a look at 5 things to start your day. So here's the thing regarding the rocket. There were a couple of deaths on that rocket as it struck the Polish village inside the Polish border with Ukraine. Bloomberg's New Economy Forum, sovereign wealth funds in Abu Dhabi, did well warn that markets have further to drop. Nothing really to worry us there. Ongoing fallout in here from FTX. So that is still impacting cryptocurrency markets and pushing those markets still into negative territory. US equity futures initially lower and they did have some declines, but in here at the moment, kind of marking time as we go into today. And we've already looked at the data that we have today. So we've got all that coming up. A headline, UK inflation hit 41-year high, soaring energy prices. We've already kind of covered that. Shot across the bows in here. So the jolt because of this explosion, but really not having a significant negative impact in here. And this is, them covering the same kind of stuff that we've already covered in here. This is the Reuters equivalent of 5 things to start your day. Futures tick highs versus await retail sales data. And then if we look in here, European bourses are actually lower mostly this morning. The DAX is up to 1% lower. FTSE is pretty much unchanged, and the CAC about 0.5% lower. So European exchanges are lower in here today. But if we look at US in here, we nudged higher yesterday and pretty much marking time as we go into today. They were lower than this. We have had a slight rebound to pretty much unchanged on the S&P and Dow, 0.2 lower on the Nasdaq, so not too much at all. Quick look at the tool in the Fed tool in here, but that's been steadfast at around 80% for the December meeting since the CPI data pretty much. It's been sat there. It's going to be a fairly short webinar in here this morning, guys. There's not really too much to add to what we've seen recently. We did get this kind of a fairly strong day yesterday, but the market did dip and then rebound though on that the news from the missile going into Poland, but nevertheless holding in, I think, still fairly firm. We did get the impulsive rally that I was looking for yesterday. We did talk about that on the call. This is the Nasdaq. It got up close to the target I set up here. We had the target up there 11,946. We got up to 11. Where was it? Sorry, 11. Actually, no, sorry. The target was here. Did we get above that target? Sorry, the target was 12,140 and we got up to 12,118. So very close to my target in here. We had that as a target yesterday. And then the market obviously set back. But if we go, this is the Nasdaq. If we step into the 15-minute chart, so there's the strong impulsive rally from yesterday. After the open, and then the market, then we get the setback in here, or into the open actually, and then the market, we get the setback, but then a rebound, and I think it's holding in pretty well, holding above. If you go back and look at the day before, we're actually holding above the highs from Friday and Monday. Okay, so we're holding above those highs, and obviously we had the spike higher and back on Tuesday. So this still looks resilient to me in here. I'd probably be drawing this little counter trend line off the top through here and looking to go long on the break through that. It's not the best trend line in the world, or just above these little overnight highs, which we got just below 12,000, 11,963. So either through the counter trend line, it would need to take out the low in here, the low from yesterday, back below 11,760 to look more negative. Similar story for the S&P. Again, the push higher and a setback market. So these are both potential shooting star candlesticks, which are negatives, right? But it depends how we react today. And the market so far reacting positive. And if we go into the S&P in here, you can see there's the new high, the impulsive rally. There's the sell-off because of the missile, and then the market quickly rebounded though. So we got that jolt lower, solid rebound. It did just undercut support here, but held this support down here. So the support is gathered between like 3,963 and 3,950, and we bounced yesterday off of 3,960, and then again, I'd be drawing the same kind of little counter trend line off the top, through here, up through there, or through the overnight high back above like 4,016, 17 looks more bullish. It really needs to go back down below the low, and really the low over here to be far more negative. 39.51, as I say, the low there from yesterday, 39.60. The overnight low around below 39.80 would make it look a little bit more wobbly as well if you want an earlier signal. Let's take a quick nod to gold and oil. So in here, gold in here didn't get the impulse rally that we saw on stocks in here. It did push higher, but not as impulsively, but very steadfast in here this morning. And if we go in here to gold, so you can see not quite as impulsive, the rally in gold, as we saw on stocks. And remember, we looked at these kind of multiple kind of flagpole, and then this kind of grinding flag. Still feel there's another impulsive rally to come out of gold. It will need to clear the spike high from yesterday, which is up at 1791.8, back below like 1769, 1770, 1769. It looks a little bit more wobbly to the downside. Let's take a look at oil. Oil in here, kind of marking time. It did undercut and rebound yesterday, but not a significant rebound for me. This still looks fairly negative in here for me for oil. And if we go into oil in here, even though we've had this kind of rebound effect, it's kind of capped off by resistances here. So high 87.48, more recent here, 87.51. So we're kind of failing that 87.50 area on 1, 2, 3 occasions now. Whilst below there, I'm negative. Above there, it probably switches a bit more positive. And on oil, I probably suggest we're using this kind of this line through here, or the more accelerated one through here, down through there. So down through either around 86.30, down through the overnight low, 85.84, or down through the trend line here at like 85.70. So those are the trigger points on the downside for oil. Going to be a short one today, guys. It's only been 10 minutes, but I mean, there's not a lot to say. Not a lot of developments since, very few developments overnight. We did have that inflation data out of the UK. It hasn't really impacted onto the US stock indices or the gold oil markets, global markets. So markets in here pretty much wait and see, I think, now till retail sales, which we have now in 50 minutes. Have a great trading day, and I'll be back with you with another bull versus bear webinar tomorrow.